Hi and welcome to this video. So hopefully you have downloaded the question that's posted on Moodle. Please have it ready and print it off. You really need to have these questions printed off or it's much easier to do. The purpose of a bank reconciliation is to compare our cash account. So what we've journalized in terms of cash for our business throughout the month, compare that to what the bank has received and paid out throughout the month. And in a perfect world, those two things should be exactly the same. But we know the world's not perfect. There's timing differences. So differences between when we've recorded things and when the bank has recorded things. That's one thing we're going to collect on our bank reconciliation or take into account. There's also mistakes we've made. It's very easy to make a mistake. By checking it against the bank account, we can pick up on those mistakes. There's also things that have happened throughout the month that we probably don't know until we actually look at our bank statement. So we'll also pick out those things. So one of the key factors in doing a bank reconciliation is to first read the additional information down at the bottom of the question. So all bank reconciliations will have this type of information. And the reason I recommend that you read it is it will really help you to not stumble into some traps or to avoid some traps. So it will tell you why things have happened in the bank, like these EFT deposits and EFT withdrawals, things that you would research at work to figure out why money was deducted from your bank account or put into your bank account. Also, what I'd really like to point out is this check number 314. So check number 314 was used to pay for advertising for January. That twigs me that something is going on with check 314. So if we look at check 314 in our bank statement, it's for $12.92. And if we look at it in our books, it's for $12.229. So what's happened here is when we made our journal entry, we accidentally put in the wrong number, and that happens. And that's not a bad thing. It can be fixed, and it's fixed with a bank reconciliation. So I know automatically that check 314 is going to go into my bank reconciliation, and it's going to go in on the book side of my bank reconciliation. So I want to highlight that first thing. The next thing I want to do is to go and just cross out anything that matches between our cash account and our bank statement, because those two things, they're the perfect world. If it matches off, I don't want to think about it anymore. So let's just go ahead and do that. Okay, so I've gone and I've crossed off everything that matches, and that is fantastic because that means I don't have to worry about all that information. We're just going to focus now on the stuff that matters and the stuff that will go into the bank reconciliation. So when you start your bank reconciliation, you always want to start on the bank side. So the bank side starts with your ending bank balance. So you want to see how that bank balance could change or will change. So our ending bank statement balance is $32,618. So we'll pop that in here. Now, the great thing about our bank side of the reconciliation is there's only really two things that go on here. And to get the things that go on this side, you now look at your T account. So we have 2 deposits in transit here. So that's one of the things that can go on our bank reconciliation. So this deposit in transit for January 29th, we've got the money, we made the journal entry. The thing is, there's a timing difference between when we got the money and the bank actually gets the money. You can assume that we got the money during the weekend. February 1st is Monday. Monday's when the bank will actually record the transaction on their end, which will come through on the February bank statement. Since we're confident that will get added in to the $32,618, we're going to add it on this side of the bank reconciliation. So I'm just going to check those things off. Check and check, because I know they're done. All right. The next thing are outstanding checks. So again, timing differences. We've written checks to our suppliers, but the suppliers just have not cashed those checks yet. So as soon as our suppliers cash the checks, the money will physically come out of our bank account and get deducted from that bank statement balance. So on our bank reconciliation, we are going to deduct outstanding checks. So there's check 315 here, check 316, check 317, and check 318, all good to go on our bank reconciliation. So now all we need to do is take that bank statement balance, add the deposits in transit, subtract the outstanding checks, and we get a reconciled balance of $24,016. Now we can move to the book side of the statement. So the book side starts with this book balance, what we say we have in our cash account. So at the end of January, we say we have $25,959. Now that's the last thing we're going to look at on our book side. Now we'll focus on what's going on in the bank account. So we first want to figure out what's been added to our bank account that we didn't know about, that we haven't yet captured in our T account. And the first thing is this $526. It's an EFT. Here it says it's an EFT related to a customer's account. So we'll just add that baby right in there. Next, we can look at what's been deducted. So we've got an NSF check here. So an NSF check, it stands for non-sufficient funds. What's happened is a customer has come in, given us a check. We deposited that check in good faith, but then when the bank actually went to get the money from our customer's bank account, he didn't have that money there. So they've now subtracted that amount out of our bank account to nullify the transaction. We didn't get anything, so we shouldn't show anything going into the bank account. So we're going to deduct that NSF check. All right. Let's move on to this EFT transaction. So we were paying for our monthly payment here, our monthly insurance. So that was taken out of our bank account, so we'll subtract it on our bank reconciliation. We've got this crazy service charge. We got dinged for $70, so we'll definitely register that on our bank reconciliation. There we go. All right. So now the last thing to deal with is this nasty check number 314. So when we wrote 314, this amount should have been $1,292. It's really hard to write with this pen. So we didn't take enough money out of our bank account. We should have taken out another $63 or deducted another $63 from our cash account. So if the difference between these two numbers is $63, that's the amount we want to fix. So, and we should have deducted more when we made this original transaction. So we'll fix our error by deducting $63 here. Now the tricky part when you make mistakes is sometimes they'll go up here on the add side, sometimes they'll go down here on the deduct side, and you just have to figure out if you should have added or deducted it. But you know you've done your bank reconciliation correctly as soon as you find that your book balance is the same as your bank balance. So to get our book balance, we're just taking that book, that ending book balance, adding in the EFT, subtracting that NSF check, subtracting the EFT payment, subtracting the service charge, and fixing that error by deducting another $63. So we have our reconciled balance here. All right. Yay. So now that we've done our bank reconciliation, we can go on and do the journal entries. So the journal entries are really important because we've got all of these things that have ended up on this side of our bank reconciliation that have not actually gone into our T account yet. So all of the other things have been registered in the bank or registered in our T account except these things. So we just need to update our company's books by actually doing a journal entry, which will eventually update our cash count. So things will be great. All right, so let's do it. This is when we really need to pay attention to this additional information down here, as it will tell us why we had those transactions in the first place. Okay, so now when we go to do those journal entries, all of these journal entries will be dated for the end of the month, the end of the bank statement month. So I just like to go straight down the list so I don't miss anything on this side. So I'm going to start with this EFT payment here. So if we go to our other information, the EFT deposit on January 1st was related to a customer's account. So we can assume that we're collecting accounts payable. So if we have something added on the bank side, look at all of the other ads have gone out in as a debit in our cash account. So anytime you're adding here, you're going to be debiting cash. So we'll debit cash because we actually got $526. And our credit is to accounts receivable. A customer was just paying off their accounts receivable balance. All right. Then we've got the NSF check. Well, darn. If it's under this deduct column, automatically I know that I am going to credit my cash account. So I can put that in automatically and know I'm going to get at least half of the marks for that journal entry. Yay. Now, originally our customer came in, paid us a bum check. We just found out it was a bum check. So really, that customer still owes us $1,678. When customers owe us money, we debit our accounts receivable. What is going on? All right. Next one was our insurance payment. So we paid $658 for insurance for the month. That was for the month of January. So it's already January 31st. So we've used up that insurance. So I'm going to debit my insurance expense. For $658, and again it's on the deduct side, so I'll credit cash. Next one is our bank service charge. So again, we'll date that for January 31st. It doesn't matter what day it happened on the bank statement. We'll have an account called bank expenses. So I'll debit my expense because expenses are always debits. And again, credit cash. That's $70 because it went out of my bank account, and that's how I symbolize it in my T account. Last but not least, we have that check error. So if I can just insert. So January 31st. So check 314 was used to pay for advertising. So when we originally did the journal entry for that payment, we would have debited advertising expense and credited cash. We just did it for an amount lower than we should have, so we need to fix those two accounts by again debiting advertising expense and crediting cash. All right, so there is our bank reconciliation complete. Hope this video has helped. Have a great day.